You've probably heard of ETFs. I mean, if you look at Google Trends, you'll probably see that ETFs are a popular key search term. From low-cost ETFs to dividend-focused ETFs to growth ETFs, I mean, the choices are endless. But what good is all this if you have no idea what an ETF is? ETF is short for Exchange Traded Fund. It is a basket of securities that is traded on the stock exchange, similar to individual stocks. Okay, let's break it down. Imagine you're going shopping in the stock market. You want some shares of Google, Tesla, Apple, hell, even Netflix, but you only have $100 to play with. So you look at the share price of every individual stock and you realize that you're one broke son of a... Now, say you have that same $100, but instead you find an ETF that has those same stocks grouped together as one investment. Well, would you look at that? It's the S&P 500 equivalent ETF VOO or VOO. So you invest $100 in this ETF and you now own a percentage of your favorite stocks. Boom. Now I know what you're saying, Brandon, why should I invest this way? And the answer is simple, so you don't get wrecked. And this brings me to the main reasons why you should invest in ETFs. Number one, diversification. You can either buy individual stocks and go through the headache of building a portfolio through countless hours of research, or you can save valuable time and find your targeted sector in which you want to gain exposure to. For example, go onto Google and type in ETF database and go onto the website. Here, you can track any ETF that is available to trade. You can filter down to which asset class you want, then to any given sector you want exposure to, etc. Let's say you want to gain exposure to the 500 largest companies in the United States. You click on the S&P 500 equivalent ETF, VOO or VOO. Here, you can track the latest price at which the ETF is trading at, a quick description of the ETF. You can see if the ETF pays out a dividend and at what yield, the expense ratio, and especially the holdings. You can also track the performance of the past 5 years on the average return. Number two, trading liquidity. Unlike mutual funds, which are priced at the end of the trading day, ETFs are traded like your favorite equities or stocks. This makes it easy to execute trades at any time throughout the trading day, giving you ultimate flexibility. If you ever traded an index fund or mutual fund, you can appreciate the liquidity that this offers. Number three, expense ratios. One of the best features of ETFs are the lower fees. When comparing mutual funds and ETFs, expense ratios can be night and day. Now, usually mutual funds are actively managed, whereas ETFs are passively managed. And you, the user, have to incur the added costs that comes with mutual funds. What are those costs? We're talking a management fee, shareholder accounting expenses, service fees, load fees, etc. Versus ETFs that are passively managed due to it tracking an index or a benchmark. Now that's cute and all, but let's look at the expense ratios for comparison. If we go on Google and we search the top mutual funds of 2023 and the top ETFs of 2023, we can see that Forbes has given us a list of the top 7 for both in the year 2023. Now at the top of the list, we see that Forbes has picked the large cap best mutual fund that has an expense ratio of 0.63%. What does that mean? This means for every $10,000 invested, you will have to pay $63 in fees. That's a lot. Now, if we go over to the ETF list, we look at the top pick, and that has the expense ratio of 0.04%, which means for every $10,000 invested, you will pay $4 every year. A lot better than $63, I'll tell you that. Now, I know what you might think. Brandon, really bro, $63, $4, come on, man. We're talking about a $59 difference. That's chump change, homie. Maybe. But you forgot, the goal is to get your portfolio really big in value, am I right? So imagine having 6-figure portfolio or 7-figure portfolio. Now we're not talking $63 and $4. We're talking thousands of dollars in fees that you can be saving if you chose the right fund or ETF. All in all, make sure you get a low expense ratio fund or ETF, please. So now that we know why ETFs are worth the investment, let me show you how you can get ETFs added to your portfolio. Now, first we need to find an online broker so we can make trades to buy or sell securities, etc. Now, there are a multitude of fine choices to choose from. Okay, I will never say this one's better than the other, choose this one, etc. You choose the one that you feel most comfortable with. That being said, there's a couple of choices we can choose. We can choose Fidelity Investments, we can choose Vanguard, Charles Schwab, Webull, M1 Finance, etc. Now there's plenty more other than the ones I just listed, but for this example in this video, we're going to choose Fidelity Investments. Now, why did I choose Fidelity for this example? Well, Fidelity has a very good track record. It's been around for some time. They allow fractional shares that you can trade, and they have a bunch of zero cost funds to choose from, but we'll save that for another video. Now, if you're a first time user, you're going to create an account, enter all your information, and go from there. From here in the top left corner where you see trade, you can click this so that you can buy your first ETF. Now let's make sure that this box says stocks ETFs. Then in the box under, make sure you pick the account that you just created. So it should be an individual account. Unless you pick joint because you have a spouse or somebody that you're sharing it with, it will say individual otherwise. If you have cash available to trade, then you'll see the funds available right here. If not, then you're gonna have to add funds. From here, you will be asked where you want to move your money from. Seeing how you're new to the platform, you're going to have to link your bank account so then you can add funds to your Fidelity account. Choose however much you can afford. Here, I'm going to just add $50 for this example so you can see how it works. Once you submit the transfer, you should see that the cash is available to trade immediately. If it's not, it says that it takes about 1 to 3 business days to clear. Then you'll just have to be patient and wait. Now we can go back to the home screen and click trade in the top left corner. You should see your transfer amount right where it says cash available to trade. Now we can enter the ticker symbol so we can execute our trade. For this example, let's gain exposure to the 500 largest companies in the United States, ticker symbol VOO, the Vanguard S&P 500 ETF. Let's click the buy button because we want to buy, not sell. Now we have the option to pick shares or dollars. Since one share VOO is currently trading around $360, $370 per one share, we're going to choose the dollar option because we don't have that much to invest. This is one of the reasons why I used Fidelity Investments for this example, because we can buy fractional shares of this ETF. We now entered the amount that we deposited. In my case, it's $50, and we will make it a market order. This just means that it will execute at the soonest opportunity possible, sacrificing extra fees. A limit order just allows you to execute trades at lower fees and at a targeted range, but for this example, a market order is just fine. We then preview the order and then click submit. And just like that, you're on your way to having a diversified portfolio, and you now own your first ETF. If you enjoyed today's video, make sure to drop a like, subscribe if you want, and thank you for watching. I'll see you next time. Peace.